Welcome to this new edition of ARGOPulse October 2023.
In queuing from August, investors carried their optimism into September, trusting in the resilience of the economic cycle and central banks' actions despite failing inflation. As a result, the long end of yield curves increased in October, causing bond prices to fall, which in turn weighed on equity returns. The global economic output remains mildly positive, with a decelerating headline inflation. New is that for the first time in September, core inflation also started to ease. Although most central banks are nearing the peak of their rate hike cycle, they have indicated no immediate plans for rate cuts. Looking ahead, we anticipate rising volatility due to tight lending conditions and signs of economic weakness, particularly in economies like Germany. Despite this, we continue to see value in selective capital discipline stocks and sectors, such as financials, benefiting from those higher lending conditions. Given the high volatility, we are monitoring the long end of bond yield curves closely, expecting bear repricing. The shorter end of the curve, up to 2 years, offers better value today. Additionally, defensive assets such as gold can be attractive in a diversified portfolio. We also see potential in structured products, leveraging the current volatility in rates and FX markets. We acknowledge 3 significant risks. First, there's concern about central banks making a policy mistake, potentially causing financial market panic. Second, an economic slowdown could result from stress on lending conditions or a natural erosion of economic growth. Finally, the resurgence of geopolitical risk is exemplified by the recent tensions in the Middle East, as well as other sources of tension across the globe. In this context of cautious optimism, our recommendations focus on 2 main investment themes this month. We anticipate elevated oil prices in the foreseeable future for several reasons. The fact that oil-producing countries are managing their outstanding stock by gradually cutting production, the resurgence of tensions in the Middle East, and the increased demand for oil. As such, we are looking at those oil producers benefiting from the higher oil price to finance their research to promote alternative energy sources. Our second recommendation for this month is the banking industry. Banks stand to gain from higher rates, slowing inflation, and stable macroeconomic conditions. Despite potential vulnerabilities to an accelerating default cycle which currently appears contained, the banking sector is paving the way for positive performance. Additionally, we are keeping an eye on equity volatility and are actively seeking entry points for structured products, selling volatility to generate performance. These insights provide us with a compass for navigating the current complex financial waters. Thank you for joining us today. Until next time, stay informed and stay curious.
Contact your Lincius Partners representative to explore further how to take advantage of the current market conditions.